All right, good afternoon, everyone. Welcome to ReadySetCrypto and our ReadySet live broadcast. Today is Wednesday, the 20th of July. Welcome aboard, everybody. We'll be talking about your favorite cryptos here in a minute. Until then, go ahead and hit the thumbs up button if you could. Smash those likes and let everybody know that we just got started here so we can bring more people on board. Let's get all the puppies in a box. And also let us know where you're coming in from as well today, too. So love to hear where people are coming in from. We got Aussie Slade coming in, a couple of guesses as to where he's in. You're in the Gold Coast, right? Or if you're not, you should be, right? So welcome aboard, everybody. Go ahead and smash those likes. Deep behind enemy lines in California is Robert. All right. How's it going out there, Mav? What's going on in your world today?
Hello. Enjoying a nice little Bitcoin and crypto pump here. We'll see if it sustains itself, but definitely cool to see nonetheless. And I think it is well overdue given just the recent, just overwhelming negativity. I think we recently hit a record for the fear and greed index. It has never been at the extreme fear level for so many consecutive days. I think it was like 70 or something like that. So I don't know. It's interesting times to be sure, but hey, at least they're interesting.
Mount Gox doom coming. All right, we got Done Deal coming in from Queens, New York. Awesome. You were in Queens recently, weren't you?
Yeah, in Brooklyn and I don't know, just bopping around boroughs.
I got lost in Queens one evening with a map about this big. Like, I had no idea where I was going. This is, back in the Stone Age before Google Maps and stuff like that. So
I don't think I could have handled that.
no, it was a different skill back then in those days. So it's first of all, just driving around New York, that was my first mistake, and battling with the taxis, but finally learned to just park it and take the tube. Why didn't you tell us the price would fall this far and this fast from 69K? I had a problem with my go forward machine. Extreme fear means we bounce back here and never look back. I don't know. I mean, what we're seeing here today, and we'll talk more about this in a minute, is we're seeing a little bit of the market's run out of sellers temporarily right now. And so you get these relief rallies, and actually bear market rallies can be some of the strongest ones that you'll see in any market. So, because it's like, who the hell wants to sell down there at that level? And so eventually what happens is the dip buyers kind of overwhelm the supply, things run up again. And then what you find out is whether or not the market's meant to go higher. So every bear market I've been part of, there's always people like every rally, all right, that's it. It's all over. Everything is green and sunny to the upside again. And then, down she goes. So what we're going to have to do is we're going to have to wait until the first real, this is maybe the beginning of the first real bear rally that we've had in some time now. And so we'll see how that plays out, whether that just sets up a lower high and rolls over again, or whether it sets up, consolidates, and the character that it displays will tell us everything about what we expect to see next. So we'll see. But also, we're highly correlated and tied in with the larger financial markets right now. You might as well just watch the NASDAQ for like a leading signal of where crypto is going to go, because as goes the NASDAQ goes, so goes crypto these days.
Well said.
So I'm looking for, we'll get into this in the charts, but I'm looking for a swing up to 28 for BTC for right now. And then I would sell into strength. Learn how to sell into strength right now. Don't look at every swing as like, this is it. This is, I caught the very bottom. Just sell into strength and you won't be disappointed, right? You can always get back in. You can always get back in. but it's very tough to sell on the way down as the price is tumbling down. Very difficult to get the price that you want when things are, you know, as we say, the price takes the stairs up and it takes the window down. So sell into strength, guys. All right, we will get into. So Mav, once you go ahead and get started with your section, and if you guys want to chart in your or chat in your chart requests with your ticker symbols, please. Please give me the ticker symbols because I'm clueless when it comes to project names and stuff like that. So that is the liability of being an idiot savant. Is, you know, I exist off of ticker symbols only. So.
Oh man, that is quite a conundrum. All right, guys. So we're going to very quickly run through this. I think, as we talked about on the stream 2 weeks ago, July has a couple major events to pay attention to. One we saw last week was the CPI, the Consumer Price Index, which basically showed that, yeah, people are struggling and there is a lot of fear out there. But at the same time, there's this very clear, just this disconnect between reality and expectations. You know, we keep going through these, I would say, like vibe cycles where people are expecting recession and then, oh, wait, no, things are looking better. You know, today's a good example of that. And we just keep falling back into the same cycle where Fed comes along, controls the narrative, shocks the market a little bit. And as we can see here, there's a fair chance that they're going to do the same play that they did before. But hey, could be still another chance for them to come along with 100 basis points hike. And hey, suddenly we're back into uncertainty mode and things. You see this cycle is repeating over and over again. And I think the last thing you want to be right now is 100% certain as to any which direction the market can go. I think there is just no clear indication as to when things will turn around definitively. It's more a case of when will the Fed turn dovish again? When will we see signs that the price of oil is coming definitively down? When will we see maybe a stalemate or a cessation of hostility between Ukraine and Russia? These sorts of things. There's large sort of issues or things to pay attention to in the ways that we can track the economy from many different lenses. For example, here we have a very clear slowdown of economic indicators, but at the same time, a recession is not quite there. It is definitely the case that I think this is the importance of narrative and vibes in our current situation and how that plays into the markets themselves. Because, for example, mortgage rates are dropping because everybody's worried about a recession. Oil prices fell because everybody is worried about a recession. Commodities have been selling off up until the recent spike because everybody's worried about a recession. The yield curve inverted because, at least at some points, because everybody's worried about a recession. And wages are falling because of inflation. But that can definitely make people feel like they're in recession. So right now we're in a kind of a weird liminal state between, are we in a recession? Are we not? You know, the expectations were that economic slowdown indicated, that we'd be in recessionary territory at this point. And, by some measures we are, certainly the case that shelter, food prices, oil, all big parts of the, the economy as it relates to consumer spending. These are all, flashing warning signs, more red flags than a communist parade, if you will. But at the same time, you've got a still pretty strong jobs market. I think in June it added something like 200,000 jobs or 2 million. I'm getting my numbers mixed up there, but the important part is that it went up. And this is kind of the confusing aspect: is are we moving into a territory where everything is awful? Or are we in this sort of call it hype, rips and tips, like, are we just up and down like this until the Fed changes its policy or something else catastrophic comes along or changes the narrative, resets the vibes, if you will. And I think this is a really, really good representation of this in terms of like past results do not indicate future ones. Just because correlation is there does not equal causation. And I think we can even look to some positive indicators right now. This is from AngelList, and they're showing that, there is, call it some uncertainty, call it some negativity, certainly fears of recession. What's ultimately happening is we're returning to normalcy, kind of pre-pandemic, pre-2020 lunacy, craziness years. Is that going to be the case going forward? Are we going to go back to, say, like 2018, 2019 type market? Probably not. I think we're in this for the long haul. This is going to be a cycle that plays out in multiple different ways. But importantly, what I'm trying to impress upon you is that it will play out in ways that people do not expect, do not see coming. As Doc often says, the market's there to separate the greatest number of people from the greatest amount of capital. And we're definitely seeing that right now. Right now we're seeing, after a relative, just upward spike in terms of the Dixie, in terms of the dollar strength index. Right now, the euro and the dollar are basically married. This is both good and bad based off of what you're investing in and your perspective. But I think what is ultimately going to be the case is that this is not something that can sustain itself over time. The dollar getting stronger is a good indicator if you are, looking at the U.S. market. But ultimately, it's just another example of the balance of power is shifting. The narratives are, despite the best interests of those in control, changing in ways that are unprecedented or in ways that are just not going to be able to revert to the mean, if you will. We are moving into new territory. And I think having that perspective in mind for the long term, for the long haul, that will help you, get through periods where, yes, maybe we'll shoot up to 30K, but then we'll crash back down to 15 or something like that. Oh no, unprecedented. Or is it? This is the case of over and over again. Reset your expectations to be more in line with, hey, you don't know the future, but you do know that there are assets out there, particularly Bitcoin, that are over time going to appreciate value and over time represent something alternative to clearly a system in crisis. Just because the Fed is going to shock the system or maybe, try to do that much more of quantitative tightening, it's not going to make ships go faster. It's not going to make oil pump out of the ground faster. It's not going to make corn grow any faster. It doesn't make the underlying economic factors that much more effective at what they need to be, or in converse, making people so afraid that they're not going to participate in the economy. I think after the last 2 years, people are kind of fed up of, a system that is clearly not in their best interests and clearly is leaving them behind. So that frustration is going to play out in different ways. And one of those ways is embracing alternative assets, embracing a system that, yes, still very nascent, still getting its feet under it, but I think represents a direction towards something people can align to that doesn't involve, having the boot step a little bit harder on their throat. So this is where we are. This is what 2022 has represented. There is the dynamic of power right now. The paradigm shifts are in place. Even if it's hard to see in the moment, what will ultimately play out over the long haul is it just is not the case that, the dollar is going to be the end all be all forever. Very quickly, we've seen as it's become weaponized and as, the global economy has needed to move away from the petrodollar system for multiple different reasons, inflation being one. Very quickly, we're seeing an embracing of new technologies, new innovations, new progress. Well, again, not quite there yet. Crypto still needs time to mature and find its footing. I think it represents something that is in line with what people need in this moment. It's a degree of certainty in times that are very uncertain. You can, with very assuredness, see that yes, Bitcoin does a block every, a certain amount of time, that there is a, transparency element to the Bitcoin network, and, lots of public blockchains out there that you just can't get out of the system that clearly is, protecting its own and is clearly moving towards the haves versus the have-nots. I think this is where we are in 2022. And hopefully, as we move forward into the end of the year, clearly this being the middle point of the year, it's already been, I don't know how to describe this year, but it's something that hopefully is going to lead to something soon here, because I think people are needing something to refresh the system. If they were left behind for the last 2 years, they're not any better off today. So I think very quickly we're going to see people become a little bit more desperate and embracing of new ideas and new directions. So that's my spiel for today. It is enjoy the pump. Hopefully we break through that 28K level that Doc set out earlier. But Doc, do you think it's possible it will hit 30? Is that within the realm of possibility, or is that too wishful thinking?
Oh, well, we don't know what it's going to do, right? I'm just thinking that, there's, I'll show you guys this on the chart. There's some overhead supply sitting at around 28 to 30. So I think it's going to be difficult for it to get through there on the first try, but we'll see what happens. Let's, I'm guessing you're through with your thing.
Yeah.
Okay. All right, let's take a look here at the charts. Let's see what we got to work with here today. I'm going to start off with a couple of charts that are just the, so first of all, this is the 10-year note. Again, this is the 10-year Treasury note. And right now it's sitting right at 3%. Well, guess what? The Fed's down here at about, 1.5% or so, and is trying desperately to get up to here. Now we have another hike coming next week, which is probably going to be 75 basis points. And then more than likely by September, we're going to be up here now at the 3% level. So they're trying desperately to play catch up, chasing after the train. Now, what you have got to watch for is if this starts to dump, because if the 10-year note starts to dump, then that is a leading signal that recession is on our doorstep. Okay, so we watch this one carefully. So far, it is not confirmed a major downtrend yet. But watch, if it starts to go down below 2.7%, then we might be in trouble. Okay, something else to watch for right now is the NASDAQ. The NASDAQ has just broken out, and guess what? So has a lot of crypto assets as well too. So we've seen this one, we've been watching this one, and this is a much, much bigger market than is cryptocurrency right now. So it's in multiple $1 trillion, whereas crypto had just hit the $1 trillion marker once again. So finally that hit that back again. So watch this one intently, because it's going to pull everything behind it in its wake, right? So it's going to sort of run as a blocker. So I don't know how far this one is going to hit for the summer. Maybe we're going to get up in this area or so and then consolidate. And then, like I talked about, either we're going to get a breakout to the upside or we're going to resume the downtrend. And crypto will do very much the same thing. But I think we have maybe 6 weeks or so before we get into what is typically the bad part of the year. September and October can be extraordinarily volatile, and this is where we have most of the damage occurring. If you look back over time, especially October is when, pardon the expression, but the shit hits the fan then. So watch out for that. But I think we have a few weeks here into the summer where things are going to be, nice grinding and, perhaps have a little bit of upside accumulation. Okay, with that, let's go over to BTC and talk about what we're seeing here. Again, what I'm seeing is on the volume profile, and this, of course, is going to depend on how you look at it, but we got a big high volume node sitting here, and this is where resistance will be over, and conversely, this is where no resistance will be. So we cut through here like a knife through butter, and it should do the same thing on the way back up. So what I'm looking to do is to take profits at 28. I think getting past 30 is going to be like, the Great Wall of China for right now. I think it's going to be very difficult unless you reload, unless we put in a higher low and then see it break above there. So that's my thought on BTC right now. Ethereum, I'm looking for about 1,700, taking profits into 1,700. So some of these we have been like setting out aggressive buys to our member list. And just for grins, I mean, you can see what we're doing here. We've got this list here that we put in our newsletter every day as to where to buy in, where to sell, where to take profits at, where to put your stops, things like that. So we've made a change to our service to be very, very transparent with what we're doing and to be much more trading oriented. So keep that in mind if you're looking for some guidance in terms of price levels to go after. Okay, so now I'm going to go over to some of the coins that you guys have been asking about. Let's take a look here. And the first one was, you know what? Actually, before I do that, let's go into the dollar index, because we did have a question on that. Have we turned? And I'd say no, we haven't turned until this trend line starts to break, right? So this would, to break this, it's going to have to drop into a lower high, lower low combination. So this one is still quite strong. I would say no problems there. Okay, QNT is the first one that we're going to look at in our crypto. So QNT versus Tether. And this one actually looks pretty good right now. It's coming off and it's consolidating. And what I like about this signal on QNT is that it's building up a lot of energy. So watch for this to consolidate for a few more days as it builds up energy into this area. Look for a break above 110. So this is one of these ones that was looking terrible for the longest period of time. And I was like, guys, just, chill out on this one. But it has broken that line and it is setting up and looking pretty good. So what I would say is if this continues in this small, high and tight consolidation, that is extremely bullish. And I would look for a breakout above that level. So nice looking coin. Okay, Aave is the next one. Aave versus Tether. And this one is setting up a base. What I would prefer that you do is, this is technically the very beginning of an uptrend, but I would look at this as more of like a couplet handle. I would set up the base on this one and then let it consolidate and then see if it wants to break above 125. That to me would be a better entry to be patient with this one. Don't jump after the very first little rally that we see on this. Okay, next one I've got is Hex versus, so we'll do this versus Tether. Again, same thing here. This is not particularly strong yet, so I would wait for this thing to base out. And this reminds me a lot of the 2020-2021 timeframe where we had a lot of cup basing patterns. And so we would cup out, we would base out, and then we would get these extreme explosions from that. So to me, 6 cents is that level versus, whatever denominator that you're looking at right here. Okay, so we looked at DXY. Next one I'm going to look at is IMX, if there's any other requests. These are the only ones that I had written down, so I'll check the chat here in a minute. This one also is looking... it's just starting to lift off of the ground, and I would look for this level here, so maybe about $1.25. I would let this one set up. And if we look at the weekly chart, the weekly chart is still kind of exhausted, so this actually may recharge itself by going higher, but I'm still looking at this base pattern here at about maybe $1.25. Okay, so Jeremy, we just did Ethereum couple of minutes ago. So that one looks pretty good. We had a buy at, where did we have a buy at? 1290. So we had a buy at 1290 and we're currently long in Ethereum looking to take profits at 1700. All right, next one, XFT. Welcome aboard, everybody, if you're just joining us here. All right, looks like a wrapped ether one. This one as well too. Like when I see this type of pattern that's just kind of wandering sideways, this is a base building out. This is a base building out. So it's lost its downtrend, and it had a huge, I don't know what event this was back here in late April, but right now it's just basing out, and I would let it go for a while into this range. And then maybe as it is able to reclaim this level up here, you might get some really strong movement through that level. So that's what I would be looking at for off shift. All right. Next one we have here is, okay, Rune. Let's go look at Thorchain. What's happening with Thorchain? Thorchain also is looking, I want to see an aggressive buy somewhere up in this area, which is going to be about, I'd say about 3.5. About 3.5 would be a base breakout on Rune or Thorchain. FTM. Let's look at FTM. We'll just look at the perpetual contract. Boy, these all look the same. These all look the same. And to me, this would be the base breakout would be at 50 cents. So let it just torture itself down here. And then once it builds up, and I would like to see some good volume coming in when it breaks out. Good volume on a breakout is going to be good. Okay, let's see. Matic, which is Polygon. Okay, let's see. We're actually long on this one. There it is. Okay, so we're long on this one after this base breakout. So we had a base breakout at about 70 cents on Polygon. And I'm looking to take profits on this at about $1.20. Now, it's come down really hard today on pretty big volumes. So my stop is back here at about 70 cents. I can always get back in, but I don't want to lose anything if it does a false breakout, does a throw over here. But as long as it holds 80 cents, I'm not stopped out, but I'm looking for maybe about $1.20 for the profits on this one. Okay, let's see if ETC. Ethereum Classic. I have not looked at this one in a while. Okay. So good volume coming in. We're seeing good volume, but this is in exhaustion right now. So I would look for this this is kind of the same base building thing going on here. I would look for this cup to have some type of a handle and build up the energy again for this and look for a breakout, maybe above, say like 26, a breakout above 26 or 28 if you want to be a little bit more conservative would be better. So it's made a good first move, but let it set up for the next move, and then you can take yourself into Ethereum Classic. SNX. Okay, so this was one of the ones that we were watching a while back here into the spring and did not set up. So to me, this one looks to be a base breakout candidate at $4. So synthetics is a base breakout at about $4. I would look for that. Let this set up first and look for the volume to come in. You want to see really big volume as it breaks out above this level, because there's going to be a lot of people looking to distribute and sell at that level at 4. And so there should be big volume as the buyers overwhelm the sellers there. If they don't, then it's going to be a throw over. It'll fall back into the pattern, and you want to get back out again. Wait until the true breakout. Okay, VeChain. It looks like this may be our last one for tonight. All right, so VeChain is also in one of these bases, just like everything else is. And the base to me is setting up like right here. This is the base. And so I would not take any kind of breakout until we get above 4. And if you get above 4, this thing should shoot. and you should have some big volume there at 4 to get through that level. So if I was selling this, I would sell this on a retest of 4 cents in this case versus the US dollar. And so that should generate a lot of volume as the weak hand bears get bent over backwards. Okay, guys, that is it. We're going to go back to our lovely faces here. And thank you very much for all the great coin suggestions. It's nice to be talking to you guys and talking about actual buy points instead of me admonishing people to say, don't touch this one. Don't look at it. This is terrible. So for the first time in quite some time now, we have actually some very positive charts to look at with some real, we have some real targets to the upside. So just remember though, this could just be a bear market rally that we're dealing with. It's tradable though. It will sustain. We'll probably get a few weeks out of this thing before it decides to, maybe later on in the fall collapse in a heap. But the collapsing in a heap part of it is just part of the process. Before this market lifts off, and if you've been around for a few years, remember how bleak things were back in 2020. Or for that matter, back in even like 2015, things like that. Remember how bleak things were before all of a sudden they take off and we get the disbelief rally. And then everybody sits back and goes, knowingly says, oh, well, this is just another sucker rally. You guys can take this one. I'm going to sit on the sidelines and I'll meet you later on at a lower price. And then they end up chasing it, right? So lay out your price levels and lay out what your actions will be when those price levels are hit. And that's the way to take emotion out of this. So you can trade successfully through a bear and then sit on the sideline. The main problem with bear markets is they eat everybody's cash. And so when the true bottom comes, nobody has any funds to do anything with it until you got to chase it like everybody else at much higher prices. So be patient, wait for the price to come to you. This will be over at some point in your lifetime, right? In mine too. All right. Mav, you got any final thoughts for us today?
Yeah, I think it bears repeating for people, pun intended, that the lower the market goes, the safer it becomes. And I know that's counterintuitive if you're new to trading or it just doesn't seem right. But the fact of the matter is, at least for the large cap cryptos, especially Bitcoin and Ethereum, where we have a pretty good indication as to they will, they're a limited supply asset, at least in Bitcoin's case. And there's going to be demand for them in the future as we continue to see high inflation. It might not go away just because the Fed wants to, will it away. And I think that will play into many different avenues on people's lives and their livelihoods. And it will become increasingly relevant and necessary for people to be risk on to escape a system that clearly has no intention of helping them get off the sidewalk, before they're run over, basically. So I think this is the lesson that bears repeating over and over again is what Doc just said: trade dispassionately, take your emotions out of this as much as possible, because this is a time to not be chasing any sort of direction that's going to get you on the wrong side of the move and, have you lose capital when you need to be using that and preserving that as best as possible for when the market truly does turn around and you're able to, ride that all the way up. I think there's, and I'm talking about this in today's newsletter as another spoiler of our Omnia newsletter, which you can join in the link below. There is going to be the sort of like reconciliation or like the payout of Mt. Gox. Amazingly, this happened in 2014, beginning of 2014, where 850,000 Bitcoin were stolen from the world's largest exchange at the time. At around that period, Mt. Gox processed about 70 to 80% of the daily Bitcoin transaction volume. By comparison, Binance, which is the world's largest exchange today, only does about 7% of the daily Bitcoin volume. So, and when that 850,000 Bitcoin were stolen, that represented like 7% of the total Bitcoin, or just like a ridiculous amount. So they were able to recover some of that. And finally, after 8 years of being sort of in limbo, they're going to start paying out those to the people that have had their Bitcoin stolen. So if you're one of them, congratulations. I hope the trek across the desert the last decade didn't wreck your sanity or anything like that. But I think for the rest of us, there's going to be this sort of panic of, oh no, 200,000 Bitcoin are about to flood the market. Is that going to tank the price? I am genuinely of the opinion that no, the action of them entering the market will do very little, especially when so much of today's crypto market is dictated by the macro. That being said, it's as we've talked about a couple times throughout today's stream, it's all about the narratives. It's all about the vibes. As I like to say, this is the vibe session, where it's really the threat of the bad thing that does more damage than the actual thing itself. And that is where we continually see the markets reacting, people's sentiment, how they're feeling about things over and over again. This lesson keeps playing out. And so if you can cut through that noise and see that it's really a sham, the Fed is just trying to, make people fearful and get them into this, oh no, things are bad, recession. Oh wait, it's Prime Day. All right, time to buy stuff. This over and over again. People are goldfish as far as I'm concerned sometimes. Cut through that, see where the real trends are. And I think you'll be much better for it, because when the actual trend starts to turn around, it will be much more obvious as to where things are going. I think that's maybe not in the cards for this year, but who knows? The back half of this year could be surprising, hopefully in a good way. But anyways, guys, thanks so much for hanging out with us. As always, appreciate you spending your time with us. We'll be back here in a week. But until then, take care out there. Doc, you got anything else for us today?
No, just saying join us in our communities. We have a lot of free
Excellent.
assets and communities out there. So go ahead and join us if you like. If you like the discussion, if you like being on the leading edge of where things are going, instead of chasing it with the other shillmeisters that are out there, we deal in facts, and we're just passionate about this. So we like making money. We don't like leading people astray. So join us in our communities, and we hope to see you online.
You're free to join, by the way, too. It's quite a deal. We don't chill in there, and we take that very seriously. So love to have you. But until the next one, guys, thanks so much for being a member of this community. Thanks for being a subscriber of this channel. And yeah, take it easy. Enjoy the ride. I'll see you in a week. Cheers, guys.
All right. Be good, y'all.